Welcome, everyone. Thank you so much for joining a very, very exciting conversation with one of the most interesting people I know in the fintech industry in India. Welcome, Kunal. Uh, while you need no introduction, I'm sure that everyone watching already knows a lot about you. Uh, I will still try and do some justice to all the various roles you play. The reason I'm most excited about having you here at the Niti Aayog FinTech Month Fireside Chat is you've done it all, or you're doing it all. You are one of the most prolific FinTech angel investors. You are one of the few people who've not just actually had, at the time, the biggest exit in the FinTech industry, which was Recharge, but now also a multi-unicorn knocking on a decacorn in CRED, catering to two very different audiences. You serve on the board of one of the most iconic venture funds, Sequoia, which is very deeply invested into the fintech industry overall. You're on the board of companies like Pine Labs. So you have vantage points that none of us do, in that you're seeing it from every lens. And I think everyone who's listening in, super excited to hear your views on what the future holds from each of your sort of vantage points. So without much ado, Kunal, why don't you tell us about what excites you the most about the future across financial services in India from CRED standpoint, from your personal standpoint, all you.
Thank you, Sameer, for having me. And it's fun to attempt to predict future and be absolutely wrong about it all the time. I can tell you with confidence that I'm sure you did not predict how big UPI will become when you started PhonePe as well. And I think that's the beauty about the industry and being especially in the tech industry. What COVID did is ensured that every single business became a tech business, and education became a tech business, banking became a tech business, almost everything. I don't see we'll ever come back to office again. We are doing conferences on Zoom, and I'm sure we're going to keep building very large companies. Sameer, imagine there are so many startups who were born in COVID, which means they have never really gone to office or don't even have an office to really go. And we are entering a world which I think none of us could have predicted just a few years ago, right? Now, the beauty about this is that things are just becoming more and more efficient. What COVID did is told us how to rely on technology for our well-being, getting food delivered to us, to getting vaccines booking done, to tracking our loved ones. All of those things made it easy to tech, and all generations automatically accelerated themselves into technology. And all the households have a CTO in the house, which is between the age of 10 to 20, who graduated the entire household to become technology oriented, and slowly but surely became the chief procurement officer of the household as well. And as we are entering this generation, now the 10 to 20-year-old knows what a good tech product is and what it is not, right? They are quite vocal, they have strong opinions, they understand, and they know how to trust technology. Now, the moment the trust moves from physical things to digital things, we are entering a very interesting time. I don't see many people will rely on going to, let's say, a physical branch or talking to a human being to get a financial product going forward, right? And I think, and this is not just true for the top 20, 30 million customers, this is kind of behavior that's permeated now to more people because it is A, more efficient, B, at least the younger generation does not necessarily enjoy talking to people on the phone. I was asking many years ago my niece that, why don't you guys like talking on the phone? And the answer was funny, saying that if you talk on the phone, what do we do with our hands? Like they love to do the thing on the phone all the time when they're talking to people or not talking to people. They're multitasking all the time. So in terms of future of fintech, what I see for the first time, any idea getting 1 million customers just magically. So, I mean, when we were building our first batch of companies, right? And I'm going back, way back, right? We have all aged a lot in our system. Getting 1 million customers was not a joke, right? Getting $1 million funding was not a joke either. Now, getting 1 million customers or getting $10 million funding is almost a given to any startup. And doesn't matter where they start, what do they start, are there the sixth player in the category, doesn't matter. Now the question is that how does like trust evolve, right? My view is that when it comes to matters of where should I deposit money, right? I think it's going to stay a lot with institutes that have lasted for decades or probably centuries, right? The reason is that trust is slowly compounding in matters of depositing and giving money, right? We cannot magically expect that, oh, suddenly we'll have new players and all the money will move over there. But when it comes to borrowing, right, I don't necessarily care about the color of money on who is it coming from, as long as it is more efficient, right? Think about the old ATM days. Even if I had a bank A card, I would go to the bank B ATM because it was just below my building, as long as it did not cost me anything extra or it hurt me in any way, right? That's exactly what's going to happen when it comes to on products which I am borrowing on. And this is talking mostly on deposits and borrowing, but insurance, right? Like there are two types of insurance products. One I really want and one that I'm pushed to buy. I don't think the products that were historically pushed to buy are going to come online quickly because it requires a human convincing and a human need to do that. Most people are avoiding some of these products because they don't think that they need it, right? But let's say products like automobile insurance will move online at a much faster pace because the new age players will remove more and more friction, think from first principles, and do fundamental innovation on the product itself, on how those products were sold. You've seen the growth in investment products already, right? Crypto is an interesting accelerant of sorts where we saw a very different behavior emerge. The clarity on that space will keep emerging, but the thing is that the user behavior demonstrated by a large cohort of customers is super interesting. Can we stop it? Can we make it more regulated? All these questions are going to be asked in times ahead, but the consumer is moving at a much faster pace than companies can keep up or regulators can keep up. And efficiency in everything is appearing. Like I said, like earlier, that all of us unicorns can claim to be unicorns, but all of our disruptors are already born. And that is the space at the innovation is moving. Shelf life of companies is shrinking dramatically. And to build enduring institutions in the times ahead is going to be rooted in a lot more human values versus just product innovation.
Lots of life lessons in there, lots of guidance forward in there. By the way, picking up on your last point, I completely agree. Especially given the accident that COVID has been, now age-old institutions are also transforming themselves. Multi-generational business houses, we are seeing this world over. We're seeing Tata coming out with a super app that was not even a conversation 2 years ago. Look at how fast they're moving, they're entering. Geo, retail, a lot of business houses in India and obviously internationally as well. Completely agree that it's irreversible because the CTOs in every household have been gone. I had that sort of strange moment recently with my son, who's not even a teenager yet. He convinced me to move from Chrome to Brave as a browser because he gave me a lecture on privacy blocking and Web 3.0.
Wow.
I'm like, how do you know this stuff? And he's like, he started learning computers in school in 3rd grade. Pa. I'm like, whoa, right? And I remember getting access to my first pen game, and it was a 386 in my like 10th or 11th grade. And that was like, I was the coolest kid in town at the time. I think technology barriers have been blown away in the last 4 or 5 years. Data access, information access has been blown away. Um, I think the other thing that actually is blown away is information asymmetry in terms of just static knowledge. I call it static knowledge, right? Data, whether it's something that's within a company, when you partner with businesses, payments, insurance, banking, any of these categories, getting data takes less time than ever to understand the structure and guts of an industry, which is actually very unnerving. Talk to a lot of friends. I'm in my mid 40s, people who've been in conventional financial service industries. The know-how was all sort of based on learnings and interactions that were not necessarily very digitally documented. They were in-house. Now that things are going digital, like, oops, that 21-year knows exactly the same amount of information that I do. And here, I think the regulators have actually played a very progressive part in terms of putting out a lot of the data.
Yeah.
And I think startups are also trying to do their part. One of the projects that we worked on during COVID, which was Pulse, we are super proud of because it's put out 20 billion data points worth of anonymized content out there, and we put out APIs on GitHub. And we've had very, very interesting outreaches from academic institutions, think tanks who are advising the public policy side, but as much, there's been students from smaller districts saying, oh, cool, can I build on this? I'm like, that's exactly what it's for. So yeah, I think the rules of the game have changed completely. So now, in fact, I know you and I have talked about this often. I think you're going to put a lot more premium on people who can do second order thinking as opposed to acting on available data. I think in this day and age, if you can't act on the data that's available, you're not even a dinosaur. Like you're way before that. Now, there's no excuse for not using data. And by the way, if you can't, your CTO will basically just talk to your data scientists and just move all the heuristics over to an ML model. So you're out. Now it's about, can you meaningfully understand product trends, what builds on what, how do ecosystems shape, how do network effects shape, and identify where your IP will lie, right? And it's, I think the last thing that is both super exciting, both about fintech, but technology overall, is more unnerving than ever because there's no static profit pool, as you said. Earlier, if you spend in India $10 million on building a category, any category, a VC wouldn't fund a challenger easily, maybe a second, max a third in the category. Today, if the cost of getting a big piece of the pie in any sector, insurtech, lending, banking, I dare say, if tomorrow banking licenses were on tap, like let's say the AMC filings are, there'd probably be 100 applications by year end. And it doesn't matter what the minimum deposit is, because there's 100 entrepreneurs and possibly some very good ones who believe they can fundamentally retool and reshape the banking experience. And so capital is not a barrier to entry in India anymore. In fact, there's a surplus or glut of capital waiting to back anything that could actually, like, we call a genuine defensible green space. Entrepreneurs aren't just geeks anymore. They actually know how to tell a story better than ever. I think millennials are better than our generation was. So that, I think we're seeing it, we're living it, which is why life is super exciting. But let me ask you this: you are the first port of call for almost anyone entering the fintech industry in India. Small town, big town, lending, banking, payments, any category. How do you decide amongst all of these really smart and hungry, ambitious entrepreneurs who to back? What's your starting point for the decision making? What's your minimum sort of guardrail?
It's super easy. I don't decide. I just support all of them.
Okay.
The reason is very simple. I think all of us have been very lucky by all that we've got from the ecosystem, right? And my reason of investing is just paying it forward. My intent over here is to not really convert this into a revenue feature of my life, but engagement feature of my life, right? And you can't make every feature into a revenue feature of your life. So if I want to create more wealth, I can build more companies. I don't have to kind of profit from everything, and I just pay it forward. And the reason to back many people is that, Sameer, we all think that we are self-made, but there are 1,000 people who have helped us achieve what we have achieved, right? I'll give you a small story. I still remember I was very young, and I used to be a delivery boy at one point of time. I used to deliver things, and I had a kinetic Honda through which I used to deliver, and I had only 5 rupees left, and that time the fuel used to cost 30 rupees a liter. And I went to the petrol pump and said, "Yaar, मुझे car servicing, scooter servicing में देना है, आप 5 रुपए का petrol भर दीजिए." And that petrol attendant knew that I was lying. I just didn't have money, and I'm sure he gave me a lot more than 5 rupees. I can't go find this person and return any favor. I can just pay it forward, right? So I think these are all the people who have helped us. I don't decide. What I do know is that any judgment that we pass on people will turn out to be wrong, because we do not know their journey of compounding. This is static knowledge on what they are today. We don't know what their evolution is going to be in a year's time, 2 years' time, 3 years' time, and what kind of experiences that they will get. I used to often say that historically we used to be valued for years of experience. Now we are going to be valued for experiences per year.
Wonderfully said. So if I'm hearing you right, every wannabe or budding entrepreneur here in the fintech space particularly should be reaching out to Kunal Shah to get that first break in life. Yeah, wonderful. So let's move on to, I think, the second topic that is, it's looming, it's lurking, is we've had an incredible run in terms of capital liquidity and availability in the last 2 or 3 years. Even by the cycles we've seen in the past, this surely from the Indian standpoint, ecosystem standpoint, has to be the most ridiculous one we've seen, in a good way. But we're seeing very aggressive market corrections, and even more so in the fintech sectors worldwide now. Bunch of young entrepreneurs I'm talking to nowadays, or even colleagues, more mature companies, are nervous about what this down cycle looks like. And I find myself often telling them, I love down cycles because it separates the wheat from the chaff. But I'm curious, how do you see them? How do you navigate them? And what's your advice to all these people you're advising, working with, or even your own colleagues in your team? What should they look out for in the next 2 or 3 years? What's the opportunities? What are the traps to guard against?
I think fortunately we've seen enough cycles, Sameer, so we can speak with a little bit of experience. It doesn't unnerve us as much as it used to before, because we know this is a perfect time to build. It'll have less distraction, less capital sloshing around, less many people fizzling out because they'll make bad decisions in this period of time. I personally feel that the 3 things that one should be careful about in this period of time is to realize that your number one role as a CEO or a founder of the company is to give the company runway that always can recover from any cycle, right? If you are going to operate with 7-8 months of runway, you will be a roadkill no matter what, right? And I think you have to be careful about that. Free charge, we almost had 2 or 3 instances where we almost died because we did not understand how to operate with cycles in mind. At CRED, we always think about always having a 3 years runway all the time, no matter what, right? That's one. The second thing is, this is a great market where you will get great talent, great M&A opportunities, great building opportunities, because less market heat. So this is the time you should be hustling the most. The third thing is less distraction. You know that you don't have to raise money because there is no money coming in, which means you are just focusing on building. A lot of times when you're constantly in the money raise mode, your mind is constantly distracted. Sameer, your biggest, let's say, version of PhonePe was, it's so much more efficient than anything else that you've built in the past, with very little capital used, solid unit economics, largely because you came from seeing what happens with more money. It doesn't really solve anything unless you are really building and building. And I think it allowed you to focus on not on generating vanity metrics for the next round, but building A+ team, which is unfortunately not hackable. Think about this, Sameer. Both of us can raise $1 billion if we want, but we can't hire 500 engineers of high quality if we ever try to. So the question is that the good players will focus on what is really more important. Interesting, however, this time, for the first time, seeing talent from banks, insurance companies, top talent is moving to fintechs. I had not anticipated it will happen that fast, but now I'm seeing in a huge number that change is happening.
I fortunate in that sense. That one didn't surprise me because prior to PhonePe, Flipkart, 2011, 12, 13, 14, when e-commerce started taking off and a few big players came in, we saw an exodus from some of the best physical retail brands, FMCG companies and other supply chain companies. Everyone suddenly, there was this window of 2 to 3 years from, I think, 12 to 15, where I think everyone attempted at least once to join a startup in the commerce industry. In fintech, I think it's happening for sure. We are seeing it. I'm sure it's in larger numbers than you and I even tracking perhaps. But I think the reason that it's happening is the pace of innovation. While both parties have capital and both parties know that the future is digital, the pace of innovation is a function of where the engineering talent lies. And exactly as you said,
yes,
we could raise $1 billion. I think the banks and insurers and others, there's many that have billions on their balance sheet, but engineers are nobody's hostage anymore. It's almost cycle agnostic. There's no market cycle over the last 20 years that has made the talent, the technology or engineering talent market less competitive. Every passing year, if the markets are down, then people want to actually sort of double down on innovation. So you need more engineers. If the markets are up, you're just expanding and you need more engineers, data scientists, designers. It is a bloodbath. And I think a lot of people from the industry who want to be part of the innovation curve are finding themselves going to where the talent's at. I mean, and this is where like Bangalore's scoring, right? I remember we spoke not too long ago when you mentioned after having been in Bombay for a lifetime that, hey, I'm moving to Bangalore, right? I mean, and with everything that you had to offer in terms of your own brand equity and the capital you'd raised and the brand you had, the need for 50 engineers makes you move cities. I just can't remember that in my 20s. Like I would go to where my job was, and it's unprecedented. It's also one of the things that actually worries me, and this is actually my next question. We are 1.4 billion people. We are a heavily underpenetrated market. Everything, loans, banking, insurance, investments. I see more passionate entrepreneurs entering fintech than ever. But if I take a 5 to 10 year view, in my office, my colleagues asked me, what are the 2 or 3 things that worry you the most? I told them, I think the one thing that really keeps me awake is the dearth of top-notch talent to build both deep as well as large-scale massy solutions. Because in India, anything that takes off, as you said, it's $1 million in a week, and then you're talking about like we have 250 million annualized users. I mean, it's just you have to build for scale in India. Talent is very hard to find, especially with that much capital. Every engineer worth their salt today wants to start up instead of building as part of a company. And the second thing, I know I run counterculture to a lot of my brethren. I actually believe that the work from home experience is going to cause deep scarring in time. Yep. Because what I'm already seeing, I mean, I think the mental illness data is already sort of stacking up, but I think more than that, some 20-year-olds early in their career who are not picking up on softer signals and not learning how to build intuition out of data by listening to others. First principles are easy to sort of share, you can narrate them, but converting experience into intuition, you need to be around human beings, right? It's one of the rare things that human beings have that others don't. We have the power of intuition. We can look, we can gaze forward. And I worry that with the work from home setup, if it lasts too long, the people building solutions for Bharat particularly, not just Bharat, but India even, are not actually meeting their customers anymore. The one thing that connected the engineer of today, pre-COVID, to the market that they're catering to is that they were out in the market and dealing with the same pain point of standing in ATM lines and banks and getting solicited by insurers and all of that madness. Uh, what's your take on how to stay connected to the grassroots where our market is at when you're building remotely or from what I call our tech ivory tower today? How do you stay connected?
I think there are two issues to connect it. One is staying connected to consumers, and one is the osmosis of learning from our leaders.
Mm-hmm.
The reason we will not have a learning coming, a lot of instructions, for example, let's say in the past, you would be talking randomly on the floor and 50 people were learning from that discussion. Now you are doing a discussion, the same discussion on Zoom, and 50 of them are not overhearing that conversation anymore. So the passive learning that used to happen at lunch, at dinner, at speaking on the floor, arguments that were happening, which were publicly screaming, all of that is gone. So I just don't see the connection, but I see the connection from both the sides being lost, right? And we are average of 5 people we spend time with, and now we are again with our family. So the question is that how will that change? And I think the consumer argument is an interesting one. Now, the thing is that we will still have biases. We will not have facts and anything that kills our biases, right? Companies will have to create mechanisms where biases are constantly killed, right? For example, I think companies will have to create recognition and reward mechanics for people to break biases of the company, right? And celebrate that. Where there is a view and somebody finds so one of the values at CRED is truth seeking, right? And we constantly reward people who uncover truth which is different from the belief of the company, right? For example, we always thought that people who don't pay the credit card bill in full must be people who are not very affluent, and affluent people pay on time. We've seen in our data that there is no correlation between affluent and non-affluent on not paying credit card bills. It's the same percentage. Now, this is the truth-seeking behavior that you have to encourage, where you break biases, right? And biases exist, right? Biases are also a superpower which allows you to build some assumption and move forward. But constant killing of those biases is what needs to be encouraged. And what you're talking about consumer connect is nothing but killing of biases. Sure. They want this, but what if their needs have changed? We don't know that, right? What if their life has changed? What if they already know the next stage, right? We are in the same belief, oh, Geo Agya, they're watching short videos. What if they're doing something else now already? What if that has changed? What if their demand needs are going to be something else altogether, right? What if the new generation is already different when it comes to, let's say, relationships or consumption or buying, right? There are so many new apps that emerge from nowhere and become really big, and all of us are not keeping up anymore, right? So one of the reasons I also invest is that it is the fastest way of killing biases, right? Because I'm like, I can't believe this worked, right? And that's great. Like, what if I am more wrong? What if I am wrong once a week, which means I'm evolving constantly? What if you are living in an environment where you're not wrong every week, every day, which means you're not evolving, which means your biases are not getting killed anymore. So I think the solutions may not be that people come back to work. I think new rituals, new mechanisms have to evolve, but it will only come when we accept that it's not going to be reset back to what it was. We are waiting for COVID. We are thinking of COVID as some festival that's going to end. And when will we accept that, okay, we may not really have that luxury, right? We may have a new variant that might come. We may need a new version of booster or vaccine or something else might happen. Are we prepared to go fully remote if we have to, while making sure that people are compounding at a fast pace? And I think a lot of things were just done because people are at office, right? Like I said, osmosis. Yeah. We've not figured out mechanisms on how to make osmosis happen if people don't come back to work.
But you're bullish that we will adapt quickly enough so that we do figure out alternate mechanisms, both to understand how our customer needs are changing without necessarily ever physically engaging, and uh, to actually have that osmosis happen at a healthy level without colleagues actually being face to face often enough. So yeah, eternally optimistic. I like that. What else at a 30,000-foot view level, right? We're talking about FinTech Month. I think 5 years ago, if we actually uh, even said that FinTech would be large enough, exciting enough at a national policy level, there's so much discussion around it. I think both of us would have just laughed, right? So lots obviously happened, and we have perhaps one of the best public-private collaboration frameworks in the world right now, which I think not enough is said about. I've obviously been a direct beneficiary of one of them with UPI, but I just see BBPS, ONDC, GST, Covin. I mean, without Covin, I don't know how many million people would have.
Unbelievable. It's unbelievable. When I still remember, I mean, it's funny, right? I still use UPI as a magic trick to show in the US when I meet people and they're amazed. Even now, it's like, and we take these things for granted.
So we've been very, very fortunate. So let me ask you this then. I think the two sectors that are still very heavily underpenetrated by the known needs of the market today. One is lending, where people themselves are saying, I need loans, and we've not met the market yet as an industry. The second is insurance, where I believe that a lot of people do need, maybe not the products of today, but some kind of insurance to protect themselves. We've seen the carnage, especially during COVID, with 100-odd million people going back into poverty. It's tragic if years of work can sort of get undone by a virus. So insurance is a need where the consumer is not saying I need it, but I think the policymakers are correctly saying we need to have more coverage. For these two sectors particularly, what are the kinds of policy, platform, product changes that you think India needs to be looking at to really have, to use one of your favorite phrases, a delta for impact? What will it take? You're in lending, so you're seeing it.
I think ultimately every fintech is going to be in everything. It's just a matter of time. We choose different paths to arrive at the same conclusions. But the reality is that in lending, the issue has never been of demand. The issue has always been about being able to collect, right? And therefore, majority of lending in this country is done through methods like gold loans, which are secured in nature, right? I was telling somebody that majority of the records in the bureau are because of gold loans and not because of credit cards and personal loans or home loans, right? The volume of records are largely because of gold loans. And funny enough, the number of startups in gold are barely a few, right? So the thing is that this is the consumer connect problem, right? It's the second largest imported item of the country after oil is gold. The number of units of loans sold per month are highest in gold. The number of customers in bureau having any lending product in their bureau record is gold. But unfortunately, the tech involvement on that is still very early, right? This is exactly what happened when I started FreeCharge. Because majority of the people were postpaid customers, they never thought about building for prepaid and recharge, right? And I found out that 99% of the country was using prepaid. So to me, building FreeCharge was not a big deal because I was like, how can I go wrong? The whole country is using it. Yeah. I think the same thing is happening to gold in one way, right? So I think lending will see the data. I think most fintech, most tech entrepreneurs are terrible at macro data. I've seen that they just have no clue. For example, when I tell them that less than 2% of women have any stock on, like if 100 people own stocks or mutual fund, less than 2% would be having women, or 92% of all credit cards are owned by men, right? These data points are just not known. And I think therefore the opportunities are not very well understood. And therefore innovation is not happening. So from a pure policy regulatory perspective, it's just that making some of these things known and talked about and just creating the frameworks, right? Like, for example, all of the data platforms, I think we are way ahead. The Lego blocks are way ahead of anything that is being built, right? That's my view of building, looking at this, right? We are just not aware, right? Like, we've built CKYC, we've built video KYC now because of COVID, and we've allowed a lot of these things to happen, right? But the thing is that the ecosystem is not evolving enough to see there is so much bigger market. We are all stuck and copying each other versus trying to go to different areas, right? That's one dimension. In terms of insurance, I do believe that there is a reason agent-led networks work, right? Because the fundamental problem is inertia to buy, right? Insurance is bought or sold. That question is something that I have seen entrepreneurs ignore, right? There is a reason some of the biggest insurtech companies are still call center driven. It's not because they love call centers. It's because the product is sold more than it is bought. Now, the question is that, will we increase the financial literacy to a point where people will want to buy insurance? Now, automobile insurance is bought versus being sold because there are penalties that come which drive people. But we don't have penalties for not having life insurance or health insurance, right? And a lot of times companies give us free insurance. So do we really need to buy? Do we even know what the company's insurance is? Do we even care about it? There is enough data that shows that men who take insurance, their family members don't even know that insurance exists, right? So the thing is, there's a societal structure. I think what needs to happen is financial literacy. I would say the biggest intervention that the fintechs and public-private partnerships should do is make more people aware on how to lead a financially healthy life. And what does it mean versus constantly be in fear due to ignorance. And then all of the frameworks that we have, all these capabilities from account aggregator to this, all of that will just start flying. Yeah. Because I feel that the kitchen is ready with all the ingredients. The consumer is not financially aware of most things. Here's more interesting data for you. When we started CRED, we asked all the affluent credit card customers that what is the interest rate on your credit card. 90% of them felt it's less than 15%. And this is the most affluent cohort. Now we go further down in the market and income group, we'll find very disturbing trends on financial understanding. And I think that is the bigger thing to be done. I think we are innovating way too much on stack, but the core hardware that needs to adopt the stack, which is the human brain, not evolving.
So two very, very interesting points, right? One, I think what you're saying is, and here I'll take a note to actually share this feedback with Neeti. You're saying there's some very important macro data points that if people were aware of, especially sort of tech entrepreneurs, they would try and actually solve those problems. They're just not even aware because this is economic talk. This is not tech block talk. And I think that's something we can just solve for. Second one is more interesting. What you're basically saying is, assuming that information is there, and all these capabilities and platforms are there, we still need to get education, and therefore, for insurance, you need to convince people through education that they need it, because otherwise it's just a business of solicitation, as they say. It's an interesting one. So we are taking a counterculture view at PhonePe on that one, on the insurance side. Again, it's more as a social experiment to see whether the consumer is unwilling to buy unless nudged hard, and that's all it takes, or whether underlying that, because I think companies like Policy Bazaar and Mac Group and all these like different HDFC, they've all been advertising for so long. So I think it's fair to say most people in India know that there is something called insurance, right? What it does for them, most don't know. Why they need it, and if they need it, they don't have enough information, right? You and I don't really need term insurance. I mean, if you look at the product, you don't need it. Most people don't necessarily need a ULIP product, but it depends. That said, I do believe that too much has been done in terms of advertising the fact that your loved ones who will outlive you will need life insurance. Moral hazard says, unless it's hurting me, I'm not acting today because my life is miserable enough today. I don't think that's necessary. I don't think the fear factor approach works. This is.
I think the point is, world over, has it become something that I buy digitally? The question is that in an evolved society where people deeply understand how this works, has that changed over there as well, right? So the question is, I would ask the question is that, do people have the motivation? You can make it easy and easy and easy and easy and super easy, right? Do I have the motivation, right?
That's where I was getting at. So we ran our first campaign a few months back on insurance, and actually found myself quite aggressively overriding any of the briefs that came from creative agencies and the team. So all of them were leaning towards, one of those like old school black and white Satyajit Ray movies, post-depression era, somebody's dying, somebody's feeling really bad. And I get that that's when you make your claims. But when you will need the benefit of something just because it's staggered in this particular category is not going to drive you to act today. I mean, that's just fact of life, right?
Yes.
It's the same reason why images of people with cancer saying smoking is injurious to health has not reduced the number of smokers and the number of cigarettes sold worldwide. That campaign's not work. We went with a campaign where we basically just went to convenience and peace of mind. And we went to the peace of mind in the sense that when calamity strikes, what you're buying for today is just a happy peace of mind, because peace of mind, I believe people will start investing in today. Happiness without tension, especially in this day and age, I think a lot of people just don't want to deal with stress that they can get around. And I think it's a very, very genuine Gen Z and millennial effort as well, right? They want to travel while they're young. They want to do things. They want to have experiences. And you don't want stress. I think we'll have to find alternate methods. To your point on, have we felt the need? So I experienced this in the US the first time I went as a student. I was playing and I kind of injured my tooth and I went to a dentist. And the bill I got stuck with, despite some basic campus insurance, basically set me like 3-4 months, right, back in terms of any disposable income, like $800,000 in cash. That's just a chip because I was playing soccer. I'm like, whoa, this never happens again. Like, I'll have to invest in insurance on top because that system is so perversely like capitalist in terms of like, it's just so expensive. In some sense, we are actually a better market. I don't think the quality of healthcare is nearly as good for a large part of society, but the cost of it where it's available is not as crazy. And therefore, I think it may not come through the first bad or adverse experience. I think we'll have to try different tricks. I think that's where the market is also exciting, right? India's advertising industry, where all of us put up different kinds of ads, is so much more creative and vibrant and exciting and politically incorrect and so many different things than the state markets in the West, particularly. And if I keep aside the beer ads at the Super Bowl in the US for 10 years, I did not see an ad that did not have like 17 asterisks at the bottom, right? You and I get to have a lot more fun. I think entrepreneurs of today get to have a lot more fun, which is nice. I hope that keeps going and somehow we crack the code in these two sectors.
Yeah, I think the question we have to fundamentally ask is how will we solve motivation? And this is not fear, the need for that. And I think it will come from being financially healthy. And do people fear things or not? As a country, I've seen that we either move from complete apathy to complete panic, right? Like we do under 1-star rating or 5-star rating. We are, as a society, not emotional about these things, and therefore I ask people that which one do you spend most likely on it, like whatever the next emotional event is, can be shadi, can be a medical illness, can be something big in the house, right? So the thing is that India as a society keeps saving and then splurge, and saving, and splurge, right? So the thing is that we need to find a healthy balance, but most importantly, a better relationship with money. I think, I mean, what you all of us are hinting at, that do not have a healthy relationship with money. And I think that is the crux of it. And I think unless one big thing that I've seen the factor is that women have literally no role right now in matters of money, right? And therefore you see very like men will not even discuss that they have an issue of debt or something else. They will keep it hidden, right? And a family will not even know about it. And then they're suffering about something. And unless I see two factors, right? Women actively participating in matters of money and decisions of money, automatically you will see change, right? Where insurance will become an important thing because they will care a lot more about long term than the men tend to do about these things, right? Interesting data for you. The history of insurance was the Widows Incorporated, which was built by two entrepreneurs sold to the king that we will take care of the widows if the people die in the army, and they convinced the kings to give the money for insurance because the army guys were not giving any money for their wives. So it's an interesting way to think that maybe the structural thing will have to convince different people about this versus trying to convert the chief wage earners.
Yeah, I think there's merit to that one. I also think that fundamentally the next generation in India, and I think there's the first generation with genuine disposable income, isn't saving the same way that we were taught to. I remember being taught neither a borrower nor a lender be, and here I'm sitting in financial services defining all those learnings, saying capital availability at the right time can have a dramatic impact, positive impact on life, and lack of it can be debilitating. That's the simple argument for making lending available more easily. Similarly with insurance, if you don't have it when you need it, you can be set back an entire lifetime. I do believe that the younger lot already think very differently. I am actually very surprised. Initially, it sort of almost irked me a bit, saying, "Hey, don't you guys save at all for a rainy day?" You know, these conversations, young engineers and marketing folks and designers in my company, and they're like, "Save how much and for whom?" Right? If I'm saving as much as you guys did, by the time I'm your age, I'll just be talking about my bucket list. I might as well have lived my bucket list by the time I'm your age. I'm going to be born like you anyway. And I'm like, yeah, you're right. And I think that audience is the one where I think that the communication to them may be different. As far as women participating, I do think that the one area where I'm very, very excited, right? Most indicators are actually quite depressing in terms of women participating in the workforce decision making. When we look at the UPI payments data, it is incredible how quickly the number of people who are on just the receiving end of money, migrant workers, cross-state and whatnot, have managed to convert, as you said, some CTO in the family has managed to convert women into money spenders digitally. And that sense of anonymity in the neighborhood and the sense of like, I'm spending and I can without anyone finding out, right? We ran an ad around this actually. Very, very cute ad. I remember a first campaign. We had a worker in Kerala, a dockyard worker who sends money to his wife somewhere in Bihar. And she's got this mother-in-law sort of staring over her shoulder, trying to find out what's happening. And this guy's sending a disposable money, saying, go buy a sari. And she's hiding her phone because she's like, I got my money on PhonePe, and you know what? You can't do anything about it. Like, I'm going to spend the way I want to, right? And that actually came from surveys where people like, I really, really don't like going into a market and picking up money from the shopkeeper at a Western Union branch, because by the time I come home, everyone knows, one, the breadwinner's outside the house, and two, how much money I have, right? The rumors go that fast. So I think the payments and Jan-Dhan accounts, those two things combined, have created the base layer. I think the Lego blocks, as you call them, I think account aggregator will happen in the next 5 years for sure. I think we'll have a pretty vibrant account aggregator ecosystem. I think it'll be really interesting. That's one of the big green spaces. It'll be really interesting to see if fintechs can study the needs and patterns of women across various segments in India. Not that they may necessarily be very different, but the environments that they're operating are different. The needs may be similar, and solve for them. Because I think that is the answer to financial inclusion in India. It's definitely been, thus far, the mother of the house has been instrumental in shaping your personality, your values, and a lot of other behavioral traits way more than the father, right? You were taught to respect your father and love your mother, but the fact of the matter is you saw a lot more of your mother, and therefore I've learned both. So I think there's a code to be cracked there societally by getting the financial literacy going there. So you've left me with some food for thought there.
Yeah, I'm also thinking. The interesting thing you talked about is you talked about respect your father and love your mother. Interesting observation I had. I was telling my team is that in India, most male names are some variants of pride, and most female names are variants of emotions. And it's quite fascinating if you think about how we have assigned these thing. And uh, I think there is some version of remix that needs to happen.
Yeah, maybe you and I can tag team, and we can fund a few startups that are focused exclusively on the moms in India to actually like bring in the next tsunami.
I've done it. I think it requires a lot more cultural shift than more startups. Maybe we need to sponsor an Akshay Kumar movie for
it. Done. So I think my last question for the day, again, given that we are chatting under the aegis of the Niti Aayog Fintech Month, from a policy standpoint, India is moving at breakneck speed. I often tell my team, this is the first time in my life in 20 years where I feel like the government moves faster than the startup sector is able to catch up. So it's almost like a double whammy for regulators, right? Like everything is changing around them. But there's still so much more to be done. Now let's talk CRED for a minute, right? You picked a very, very niche position in a market where everyone was talking about Bharat and India and a billion people. You said, I'm actually going to solve problems fundamentally for the credit-worthy sort of top quartile. What are their biggest unmet needs that you guys are finding today? I always thought that we were always already too pampered with our RMs and wealth managers and 20 products we didn't need. But clearly you found a massive sort of cult following there. What are the big learnings till now? What are the big gaps in the product sort of market fit for that segment? What are you finding?
Yeah, I think our view is that startups should always have hundreds of millions of customers is flawed because you can take a cohort and do a good job with that and be horizontally prevalent for them. And I think I was joking with you earlier is that super apps should not be like some rich Indian weddings where you don't understand 90% of dishes. The thing is that unfortunately many super apps are solving for, when you become everything for everyone, you become nothing for no one, right? Like it is it is that noise, it's blur, and then you see that in your app also that people just do two things and just go like, I can't deal with this, right? And that's true for our apps also. Most people don't have many apps. They just want to deal with nothing much on their life. So the thing is that I believe that their needs were evolving quite fast, right? And their income was growing, but they were, so for example, no matter who we are, getting a visa to go abroad is pain and has to be solved. And who's going to solve for them, right? And the thing is that we can keep solving for everybody in mind. There are so many startups. Everybody has to take some position saying that I will do a good job and go deep in this segment versus trying to say, hey, I'm just going to paint this broad stroke for everything, right? And I think many global startups love to come to India because they can add 1 billion users to their thing and get market cap in a market where the ARPUs exist, right? The reality is that monetization is only possible on people who have some disposable income to buy, right? The dark reality of a lot of these 100 million plus user startups is that the monetization is limited to a small cohort of people who are monetizing, and their needs are not being met because the app that we've made for them, right, is solving for this average person who doesn't exist. right? Because so the thing is that to me, I realize that our needs are different and we need to evolve to something else, which is much more superior in experience. And we do not want to speak to a human being, right? That version is gone, right? The idea of having a relationship manager, like I don't want to, because they were anyways incentivized to cross-sell something to me,
Cross-sell
they
and
just want
upsell.
to make more money, right? So the question is that the incentives were mismatched, right? And how can you call something a relationship when they're trying to monetize from you? So relationships by design are something that makes you better versus try to sell you something. So the question is that what did
let
we make
me
of that?
let me just channel a little there, right? I totally buy the argument on why RMs are the equivalent of the insurance broker sort of calling you and saying, "Aapke paas hai kya?" Right? It's just super annoying, especially when you value your time more than your money, because that's the premium you're working with. I totally get the position you took. I guess what I'm trying to understand is, especially in the financial services space, you mentioned visas as a good example. Actually, those are adjacent pain points. Uh, what are the behavioral traits that you believe are different? I know that time is at a premium. People want experiences, the usual yada yada. But like, what's one or two like really sharp insights?
I think two, three things, right? They know when a product is made badly.
Okay.
They can see defects 10x faster, right? They just know this is buggy, this is unreliable, breaks too often, right? They drive good cars and bad cars. They know, yaar, ye wali thodi si, like I can't rely on this car, right? So they like consistency and experience. That's number one. And number two is they'd like to belong differently and not be in some broad stroke, right? They've worked so hard to come up in life. They want stratification, right? And you can't take stratification away need from any human being. There is a perpetual need, right? Like let's say the community that you live in is stratification. They want the walls to be built, right? I am different. This is different, and I will take an OTP for you to come inside my complex. That's the need, right? The third thing that I have noticed is that there is a don't treat me like a dumb person, right? There is a thing that like I get it, like
I'm
don't
not a noob.
like don't mix, like for example, we make ads that are not easy to understand.
Don't dumb it down. I can take you
Yeah,
on.
don't dumb it down for me. I will figure it out. I know. And they expect things to be a little bit refined. No, there is a word I learned, a PLU. People like us,
Okay.
right? Like they want to be treated like this is people
Exclusively.
like us.
Got it. Uh, I just did a time check. I think we'd be running out of time shortly. So again, we have a young audience. There should be a lot of college students. There's a lot of budding entrepreneurs, wannabe entrepreneurs, policymakers, I'm sure, media and others. Your thoughts on this FinTech month? It's coming out just after the budget, hopefully on the fag end of a long pandemic. What's the future hold over the next 5 years? What will keep Kunal Shah excited and going, and what should the market look out for?
We are probably entering the most exciting 10 years ahead. We should not be surprised if some of the companies who are on the panels don't exist in 5 to 7 years from now. That's the level of evolution that we are going through. None of us are complaining because we are also beneficiary of evolution, and we should not be scared and worried if we become the victims of evolution as well. But what is going to be exciting is that everything is changing for the better and becoming more and more efficient, which should help every single Indian consumer in a much better way. If I was to advise younger entrepreneurs, I would say that do not associate startups with funding. Startups is not about raising money. Startups is about solving consumers' pain points and making things more efficient than what they were before, and hoping to get paid for that, right? Unless you think like that and you start thinking that everything is all about raising money, it will create a terrible culture. And I'm really scared for that because unfortunately, the amount of news that comes for raising money and constantly founders' pictures being shown for raising money is creating bad sort of a mimetic behavior, which I hope that youngsters realize the difference between a building company and raising money. They are not necessarily the same thing. There are great companies built. Look at Nitin from Zerodha. It's not taken any capital and built a fabulous enterprise. Zoho is another example. There are so many more examples that exist. Unfortunately, all the hero worship is happening to people who raise money, and I think that's not going to help the ecosystem. So you should be careful about it.
As always, pleasure talking to you, Kunal. As always, not one to actually shy away from sharing your opinions as they are, raw and unplugged, as they say. Thank you so much. It's been a pleasure. And to the audience, again, I think the top 2 or 3 takeaways: focus on your customer, build to solve problems. The money will typically follow. Second, the good news is the money is there and is waiting for really good entrepreneurs to come in. Third, the market is probably going to be like, it's an unprecedented opportunity here for young entrepreneurs to solve for 1 billion people who are waiting. And fourth, once you decide to take the plunge and get into the fintech system, reach out to Kunal. He'll give you that first angel check, and then the rest will follow. Thanks so much, and pleasure as always.
See you, dude. Bye-bye.
Thanks. Bye.